Hello guys, so here's another video about your USD. So yesterday's candle, Wednesday, was a pretty strong bullish candle, closing above this high, closing above this high, also closing above this high. So to be honest, I wasn't sure on what to expect today. Um, so let's see on the 4 hour what we had. Obviously the 4 hour was uh, still in bullish order flow. And let's see at the 1 hour what we have here. Yeah, so this is where we entered, right? Where we wake up, look at the charts, and it's the opening of London session. So the thing that I halfway today noticed was there was actually a very nice trade in here. And I realized it way too late, somewhere in New York time. Um, but the thing that I noticed was if you take this high and you take it to this, or sorry, this low to this high, you can see there is some sell stops in discounts also overlapping with a fair value gap. And also there's still this previous high, this old high, right? So what happened is this is an impulse lag, right? We are bullish, it is an impulse lag higher. Then look, there's some kind of lethargic, slowly price action where Asia takes out these buy stops, then price consolidates a bit. Then I'm not very sure, but I think this candle just before London opens takes out Asia lows and closes above the midnight opening price. So let's see this from a 15-minute time frame, right? So you can see that there's kind of a okay, three drive pattern, 1, 2, 3. Then we push up, we're creating some equal lows. But this low got taken. And then we are some kind of consolidating around midnight opening price. And then we have this big push up to the upside. So if you go one time frame deeper, what we could see here in the 5 minute is, okay, here we swept Asia low. Swing high is broken. Then we traded lower. We were respecting the midnight opening price. Then this candle touches on this propulsion block or this order block, closes back in the range, and now you see speed. So this was actually a very nice entry. Stop here or stop here to target this high right there. I usually use the ejection blocks, so on here I would have made my TP set to something like this, and maybe I would have done it extend more to get a 1 to 2 and take most of it off. But anyways, you got the idea. And on the 1 minute, let's see if there was a more clean entry. Here we swept Asia low. We have an impulse move higher. Price trades higher. We clearly break this high. We consolidate a little bit with time above it. We go lower. Respect this. Go up or low. Here, price has created equal highs. So on the 1 minute, we kept this low, 1, 2, 1. So that could be an entry here maybe with the same logic. But if you would have entered here, I would have still put my stop loss here. And if you have put your stop here, then you would have taken out by this following price action, and here you will also be safe. But here equal lows were created, were taken out, one consolidation. This would be my entry on the 1 minute, right there. because here we have a strong close, strong body close above this swing high right there. So that would be a very nice entry. And also because we come, important part here is a few things actually. First, obviously, you see price broke this high, right? Right here. Then we retraced a bit. Here we are respecting bullish PD arrays. Then we move higher, then it creates equal lows. Those equal lows get taken out here. And this candle is respecting this BPR, or maybe it's respecting this, respecting this order block, whatever. But the thing here is it took out liquidity. That's important. And it was respecting this order block, and we got displacement. So these three are very nice ingredients to have. Next, price closes strongly above the midnight opening price. Instead of going lower, price went sideways. And then it did it again. Took out liquidity in here, still respecting this flat value gap. And now we got displacement breaking above the swing high right there. So yeah, that's lots of clues in this piece of price action. Stops go there. And yeah, we have set the target already on the 15-minute. And as we all know, that was a very beautiful trade. This could be a trade of the day. And that's it. It's a very quick trade, within an hour, 2 hour, and 3 hour even, using the 1 minute, and it will be done for the day. Okay, so then what happens? Then this high, this previous day high, is the previous day high, so let's mark it up. This is our previous day high. All right. Price takes it, rejects it, takes it, rejects it, takes it, rejects it. Then it offers a pullback, strong pullback. So this is actually a trade that I took. Let's go on the 1 minute to see what I did in here. So I was noticing price was going sideways, right? So I was kind of anticipating a pullback because we were very high up in the range, and this price action I think was in the 5 minute. Yeah, look, only bullish candles. That's unhealthy. It's not healthy. This cannot last. There needs to be some kind of correction. When you see this price action, only green candles, you cannot trust it. It is definitely a signature of a liquidity run, period. This has to be balanced sometime, some moment in time. So I was anticipating a portion of this green wave to get balanced out, right? To deliver it efficiently, because it's only buy side delivered here. A small portion here, but then again, only buy side was delivered. So I was anticipating that. So I was watching this area right here, and I noticed this. I've added a new rule to my plan, is that I want to see a very clear 1 minute, or no, let's say it differently. On my entry time frame, I want to see a very clear, strong dealing range, and that's exactly what I had today in here, because you can see buy side liquidity, sell side liquidity were all taken by this high and this low. So this is a very nice, strong dealing range on the 1 minute. So I was then looking at price, what to do. I did not enter here, I was just waiting and being patient because I wanted to see bearish order flow being established, because this might as well be a rejection from here and take out these highs again. So I was patient to see what price was doing. So price then moved sideways, as you can see. So when price was moving sideways, I saw price was creating these highs. So I said to myself, all right, I want to see price take out these highs, and then I want to see some speed to the downside. Now, at the end of the session, I got what I wanted. Here price pushes up, and here it just was taking highs. And if we measure this, of course, we are in a premium of this dealing range, also important. Obviously, right? This high is obviously in the premium. And now we are consolidating after taking out equal highs inside of a premium. That's order pairing taking place right here, ready for lower prices. So then I saw this going on. I saw price was going very slowly and going lower. You have this swing low, and then boom, this candle happens, and then this candle happens. These two candles were the clues for me to enter. I believe I entered on this one because maybe I was a little bit late, or maybe I had a 5 minute time frame on. I'm not sure the CPI is. No, it was the 1 minute. I'm sure it was the 1 minute. Yeah, I entered on this candle, somewhere in this candle. So I took the short. Let's say this right here, or something like this. Put my stops safe in here. What then would be my target then? Well, let's see how I determine my target. I measured this move from this low to this high because it's the current range we are now in, right? And obviously I wanted to target something at or below the 50% mark. So I went to the 5 minute and the 1 minute. I was looking for some sell side liquidity, which is offered here. You see here, maybe it's more clear on the 1 minute, because these lows here, there are some relatively equal lows. So that was my target. My target was something in here. I use rejection here also, maybe a little bit lower. Maybe something like this. So now I've covered most of the wicks. And it was my trade. Something like this. Maybe I had a smaller stop loss. Maybe I put it in this side or this side. But anyway, it wasn't a 1 to 2. It wasn't a really fancy move. It was a counter trend trade in the bullish market. But I did something like this. Yeah, that was my trade of today. Following my model exactly. Because we had a impulsive move. Then we had a consolidation. The consolidation took out, so it basically is a power of 3 move: consolidation, manipulation, distribution. And I got a portion of the distribution part, and it was fine. Okay, so then what happens? Let's go back to the 15. Okay, so we are back in discount. Price takes out those lows on the lower time frame, because when you have a dealing range on the higher time frame, you look for liquidity on the lower time frames. So we have this move lower. Again, look at only bearish candles. So what can you expect? Only bullish candles to make this up. Then here happens something interesting, because we go from external to internal, and you would now expect from internal liquidity to external liquidity. And that's not really what happened, because this high has the main liquidity. And there's also this swing high that was taken. And then again, price turned around and went down. So let's see if there's something on the 1 hour maybe that I overlooked, that I missed or whatever. No, not really. This is just another rejection of the previous day high also. So on the 5 minute, you can see the role of Asia was consolidation. Then we had London, which was, I would say, manipulation to take out this high, right? The previous day high was done. Then we had a lunge, yeah, what is this? A fake move to the downside, fake move to the upside. So this is now all balanced. We take out this high by a bit, but we leave this high intact. And then here we broke structure again and using the previous day high as resistance. So what happened here was, well, acting on the 1 minute, you can see it very clearly. There's another bearish dealing range right there going on. Right here. You see there's liquidity taken. That is always what you need. Without liquidity, a shift in market structure is not valid. And here there's a low resistance signature also. Low resistance signature liquidity. And here we expect something over there. It might be the order block, whatever. Or maybe it was just this fair value gap that is now filled portion. And then again, what we see is a very nice dealing range here. And also look, only bullish candles, which is typical for a manipulation move. And then we got the move down, which broke below this low right here. Not with the body. I'd like this. I prefer body closures below this low, because often what you see is that this low is getting respected and then takes off, builds some bullish order flow again, and then takes out this high still. So like this is way stronger if you ask me. Here we have a very nice strong body close, few body close below this low. And here we have only a wick. So kind of a rejection of this low. Then price trades back, but still it is a dealing range. You might, I don't know, you might argue there's this low right here, but yeah, I'd rather see this low get taken out because it's the low that took out this liquidity. Which got respected kind of, but was taken. Then price came up again, went sideways, and here boom again. Now we have a strong closure below this low. So imagine you saw this is how it looked at the time. Observe this close, some sideways price action. And the difference here with this entry right here is here we took out the high of this consolidation. As you can see, this really didn't take out some high, but we do get displacement again. So we have displacement here, which led to taking out this low. Then we went up, we failed to go above this high. We went sideways and then we got some displacement here again. So this could be a nice entry. And here again, price was going up again, but here the order blocks were now supporting lower prices. So, and there's also this fair value gap, which got overshoot a little bit. And price was still respecting previous day high, and then it went lower again. So this is also a very nice short. I would do it, I think, something like this. No, I think I would put my stop loss here. Because if the price comes here, it will definitely take out this low. So I can just move my stop limit lower. It's still possible that price takes out this low by a bit and then trades lower. So there for the body. What do we target? Well, let's see on the 15 what I would have targeted. So price takes out, we see some nice reversal going on. I think I would play safe to something like this. I think I would have done that. Maybe this low for 1 to 2 maybe. Because this low did not tap into this fair value gap. So maybe I would target something like this, a little bit above. Maybe once to take out this low, tap into this fair value gap and then move higher. That's still possible because we're going from external liquidity to internal liquidity. So that's also a very nice move that you could take here and here. Then later on we had some news, as you can see. This was the move, very beautiful. Price took out all the liquidity, took out this swing low, took out Asia low, the equal lows, closed all the way back in, and then we see some displacement higher, breaking highs, all that stuff. So that's kind of tricky because you might see this as equal highs. All liquidity was taken, then go high. So still, if this happens, I'd like to see bullish price action to be established. For example, here you can see this order block was respected, and then you want to see also bullish price action being established from here. So we see 3 green candles, then when price goes lower, or price should go sideways a bit, or at least some bullish value gap should be created. None of that happened, so I was still waiting and looking at the price, and as you can see, it was very manipulative. Price took out this lows again, took out this high, but price was failing to take out the swing highs, right? Failing to take this one out. These were just short-term highs within a lag. So a bit more structural points. So price did break this high. So when that happens, you want to see this high on order block being respected. For this bearish candle, you want this bearish candle to get respected like this, and then it needs follow-up. And instead we get bearish price action. And now again here it takes out this low with speed, with force. So that could be a first indication. And also look at this high, took out this high, this is swing high, taking out this candle, price go lower. So this is a bearish dealing range. And then price here went sideways, and now we're trading lower. And also as you look at the 1 hour, this area now, I think at least from here to, let's say, it doesn't really matter. This is now balanced. We have buy side delivery, we have sell side delivery, and we left that area with speed. So what do we now expect price to trade to? Well, I expect to at least this low, because this is some liquidity, and there is this value gap resting below. Also look at the 4 hour, same story as before, only bullish candles. So this is a liquidity lag, right? It grabs liquidity, takes it out, consolidates above old highs, which means distributing orders and accumulating orders for shorts. So we are now in this dealing range because we took out some sell-side liquidity in here. So for me, this is now the current dealing range we are in on the 4 hour, from this low to that high. And you can see also here are some more lows, and there's this value gap resting here. So I expect price to at least trade into this 4 hour bullish value gap. That's what I expect. And maybe it wants to go to these highs, or maybe it makes a deeper retracement, because if you look, we are in, let's see, consolidation, expansion, consolidation, expansion, retracement, expansion. So we are in 1, 2, 3 legs. We are in 3 legs. But as ICT says, about after 3 legs, you can expect a deeper retracement. So if you measure this whole leg, in that case, we can expect price to take out those relative equal lows, or maybe this low, or maybe it's respecting this value gap right here, which aligns perfectly, and this order block aligning perfectly with the 50% mark. Also, if you use a dealing range, oops, You can see, that's what I see now at least, that there is this fair value gap aligning perfectly with the 25% level. So that's another confluence that we can use to expect the price would go there. Then we might, maybe this is an original consolidation and price goes lower into this fair value gap and then takes it out. And is it a market make it buy model on a lower time frame? Wouldn't surprise me. It looks like equal highs to me. Original consolidation, expansion, first stage, maybe some second stage, and smart money reversal, and then we go to the upside again. I don't know. But anyways, today had some opportunities to trade. The direction wasn't clear for me in the beginning until I noticed some price action. And yeah, I hope you enjoyed it, and until see you next time. Bye.